Someone could become a millionaire in 5 years if they did this right. I know there are two main ways to qualify for the bonus depreciation from what I know. One of them is to be qualified as a real estate professional, which that has criteria. But there's another one that to me, and this is just my opinion, I want your opinion as well, that seems a little easier to qualify for, which is an active participant in short-term rental activity. In other words, yeah, you can be a real estate professional, which some of us are, or you could purchase a property, put it on Airbnb, and as long as you actively participate, you get similar bonus depreciation benefits. So speak to that.
No problem. And then just so everyone knows, you can apply special bonus depreciation on virtually almost all assets. 6,000 pound cars, furniture, whatever. But in order to actually have those losses that you're generating offset your gains when you're dealing with real estate, there's specific criteria you need to meet. Short-term rental, what exactly is that? In a nutshell, it's basically a rental activity that's less than 30 days. Now, if you have what's called I think food accommodation, that's an Airbnb where you're having turnover of at least 7-day average of your tenants actually staying. You don't necessarily have to prove the other criteria that we'll talk about for the real estate professional status in order for you to take advantage of the special bonus depreciation and have the losses offsetting your regular income. In fact, what you're basically managing is fundamentally a hotel accommodation. So with that, in itself, it's already an active participation. You're always looking for tenants. You're always having somebody to come over there and clean up. You're having to replace your linen. You're paying for the cable. You're paying for the Netflix accounts. You're paying for a whole bunch of these things. And so therefore, that's actually a business. Yes, that's the 7-day average rental. That one is easy. If you have Airbnb, everything's managed through a third-party app, which actually helps with substantiating the average amount of time that people stay in your house. 7 days, you're good. How you need to substantiate that, the timesheet, Damon, I know you're going to be able to assist with that, because typically when it comes to substantiating anything to the IRS, if it's coming from a third party, right? If it's coming from a third party, it looks that much better.
Even though it's been in play for a few years, a lot of people weren't aware of it. And what we did as a company, we managed Airbnbs, managed traditional rentals. What we did was we said, okay, in order for them to qualify for the hours, that was always the issue, right? If they get audited. So what we said was, maybe we have an agreement that we act as a consultant. And we can provide help when needed. We just can't go over the hours because, of course, no other entity can have more hours than the active participant. That's the big caveat. So what we did was we developed a system where we can actually track your hours for you and also help you manage the guests, but just not go over your hours. Make sure that you actively participate more hours than us before the end of the year. So it's very interesting you just said what you said, because there are some people who may not be able to qualify for the real estate professional status because they may have a full-time job that may be demanding. But to qualify for that active short-term rental participant, it may be a little easier because some of the things you have to prove are a little bit more lenient, because I know that, we've been doing it for 5 years in Houston specifically, and we know all of the activities that you would need to do to operate a short-term rental. So what it does is I'm saying, well, as an active real estate professional, there are different things, and I understand, but it's easier to operate a short-term rental or to prove that than to prove the active real estate profession, especially if you're working a 40-hour week. I would think the IRS would raise some eyebrows to that and say, how are you able to be a real estate professional and have a 40-hour a week job?
I mean, yeah, you hit the nail on the head with that, because when they're evaluating cases, usually they pick a client or somebody and they say, oh, this person made $200,000 on a W-2, and he's trying to claim real estate professional. I think we have a case where we can steal some more money from this guy. Let me go ahead and see if he can substantiate himself. And so they'll go down that road. But if you do have a wife or a spouse, let me not say that, a husband or wife or partner that is not working at all, the chances of me thinking that I have a case against you is very, very slim, because it's like, what else is that person not doing if not managing the real estate? I may not try to go down that road with you.
Find the right partner, get married. Someone could become a millionaire in 5 years if they did this right.
And keep their money.
My goodness. I think people can do a little bit more research to get more details if they want to, but I feel like they're set up, like they know that they have the terms, right? Real estate professional status, active short-term rental participant status, bonus depreciation, that's another term we went over. Another thing we didn't go over, but is how to get the bonus depreciation from doing a cost segregation study. But just talk about why is it needed for someone to prove that they get these deductions at the end of the year?
Yeah, so when it comes to purchasing a house, right, you want to try to purchase it at a reasonable amount. You want to save as much as you can, because you know that with older houses, for example, you're going to need to invest in that particular property to beef up, the kitchen, make sure the roof is fixed up, fix the landscaping, just improve their property overall, right? And so you may start out with a regular a loan, and then get a construction loan to basically invest in those particular ventures. And so with all of that put together, the overall cost, let's say you bought the house for about $150, then you added another $150 in upgrades. And most of the time you're spending cash for that. If you were to leave everything the way it is, right, you would have to take 150 plus 150 and then depreciate it over the useful term of the house, which is 27.5 years in most cases. Now, if you were to do what's called a cost segregation, where you're able to itemize and list out all of the significant improvements that you added to your house, now what you're doing is you're identifying exactly what all the incremental activities that you spent your money on to basically get the house ready for its intended use. That identified lists of expenses can now all be accelerated and taken in the same year. And if you're in the real estate game, I remember actually doing my own not too long ago. I spent about a good $30,000-$40,000 worth of dollars to basically improve my house. And I had to turn around and pay Uncle Sam tax dollars on the money that I spent on that stuff, because I couldn't get basically offset all of those expenses in a way that would give me any kind of significant tax savings that made it worthwhile. That cost segregation being added to the whole accelerated special bonus depreciation can now help with offsetting your regular income, so you wouldn't have to pay so much dollars to Uncle Sam.
What do those studies cost around on average?
I personally do not know, but I think they could range between, I'm going to say about $2,500 to $7,500, if that. I'm not sure. I'm probably overshooting it. That's also a fee that's considered ordinary necessary. You can write it off too. But that right there, that report right there is you're substantiating evidence that will protect you from any questions or charges from anyone else, the IRS or whatever, because it's done, one, by a third party, two, it's evidenced by pictures, seats, and other claims in there that basically help with illustrating exactly what you did.